we shall be looking at all sorts of stuff in relation to VAT. Got any questions? Please feel free to ask. The session is being recorded. If you don't want to ask any questions while it's being recorded, there will be time afterwards when we'll turn the recording off for any questions and answers. Please feel free to stick anything in the chat box. I shall try and answer the questions as we're going along. So before we actually get going, and we have to read out our usual disclaimer, which is the following presentation is produced for general guidance only, and professional advice should always be sought before any transaction is undertaken. Individual circumstances can vary, and therefore no responsibility can be accepted by Harts Limited or any of their affiliates for any action taken or any decision made to refrain from action by attendees of this presentation. Okay, that's the legal bits out of the way. The next bit is we're award-winning firm now. We won the Professional Services Award for the Best Professional Services Firm of the Year in the East Cheshire Chamber of Commerce Awards on Friday evening. So that's great to be recognised in that way. That's just some of the team enjoying themselves on the evening. So from left to right, you've got Chris Bentley, Andy Whiteley, Rebecca Rowley-Reaver and Millie O'Hara all enjoying themselves. So it's great to be recognised for the work that we've actually done, which is fantastic. So yeah, very proud of that. Moving on. So we have other online resources that we have, which is following us on LinkedIn. We are posting 5 days a week, Monday to Friday. Please feel free to follow us. If you want to follow us, you can get copies of all our latest updates and so on as we're going along through the week and through the months and years. We're also on YouTube, and this webinar is being recorded and will appear on YouTube later on today. And we're also on Spotify, where we have some interviews with some business owners who've seen it, done it, got the t-shirt and so on, but they face the same challenges as most of you will have faced. So it's always interesting to hear from people who've seen it and done it. The next events that we've got. So we had a very good business club lunch last week, and the next one, because we held these quarterly, is on the 24th of June. And that's at the Holland Hall Hotel in Bollington, where we have some great speakers, and there's a chance to win a little bit of wine and get to networking with other people as well. The next webinar is on the 21st of April, 9:30, and it's going to be on the top 10 tax tips that work. So put yourself in for that one. We've got some interesting ideas there for you, so please feel free to log on to that. And we have our next Ladies in Business event, which is on Thursday, the 11th of June from 12 till 2. You can book onto all of these on our events page. So if you go to our website at harts-ltd.com and book on via the events page, you'll be able to not miss out on anything that's going on there. Just as a reminder, this is just some of the services that we offer to all our clients. So anyone who's on this call who knows of anybody who might be interested in making use of those services, then please feel free to get in touch. We're always there for you. A quick update on what's happening before we get on our main topic of today, Making Tax Digital. That is coming in about 2 or 3 weeks' time. And you've probably seen some of the adverts on the TV and heard it on the radio. And it's all about how tax is changing for sole traders and landlords. Are you ready for this? If you're not sure what it's all about, drop me a line, give us a call, and we can explain how the whole thing works. And those that you are limited company directors of your own companies or any company, you have to ID yourself. So make sure that you've gone through the ID process. That is happening for every director of every limited company in the UK. And then as from April next couple of weeks, the dividend tax rate is changing. Now, a lot of people play themselves with low salary, high dividends. If you're doing that, this will affect you. The increases are going up by 2%. So the increase is for basic rate and higher rate payers, so from 8.75% to 10.75%, and for 33.75 to 35.75. Unusually enough, the top rate isn't changing, so that remains at 39.35%. Don't ask me the logic why, I ain't the Chancellor. And now moving on to VAT common errors and how to avoid them. We're going to cover quite a bit of VAT on this and cover as much as we can in the time that we've actually got. So just a quick recap. There are various rates of tax that are out there. We've got the standard rate, 20%. We've got the reduced rate at 5%. We've got 0%. And we have exempt. So we've got zero rated suppliers, then we've got exempt suppliers, and then we've got outside the scope. So there are actually, therefore, 5 effective rates at the moment. Nothing has changed on the government's side at the moment, and those are the main ones that we've got. So let's have a quick recap on this. VAT registration is mandatory, so you must register for VAT if your taxable turnover, and we'll go on to what taxable turnover is, for the last 12 months goes over 90,000. So you have to register within 30 days of the end of the month when you went over the threshold, and your effective date of registration is the first day of the second month after you go over the threshold. So just to be aware of that. And it's when you expect your taxable turnover to go over the 90,000 in the next 30 days. So it's not when you actually go over, it's when you realise you're going to go over. That's when you have to register. So one of the common errors we get is people think, oh yeah, I didn't need to register until I go over 90,000, or I went over 90 in a rolling 12-month period, but then I'm under it again. No, you've got to keep an eye on it on a regular basis, so that if you go over, then again, you need to be registered. What happens if you don't? Well, you get penalties, and there are backdated VAT liabilities. So what are your taxable turnover? What is included in taxable turnover? Well, the taxable turnover includes zero-rated goods and services, reduced rate goods and services, and standard rated goods and services. So you include all of those in calculating whether you're going to go over the 90,000 or not. It excludes supplies which are outside the scope or exempt, which is exempt is more the common one. So again, you only need to include those which are zero rated, reduced rated, or standard rated in actually getting to your calculation of the £90,000. So the common errors there is people trying to think, well, I've got all this sales, all my sales are included. No, they're not. So it may be you don't need to be VAT registered, and therefore they're including too much in getting to their taxable turnover figure. So what can I reclaim? What do I need to make a reclaim? What documentation do I need to keep? Right. Well, the actual documentation that you need to keep is quite extensive, would you believe? So to be a valid VAT invoice, a document must show the name and address of both the supplier and the customer, the time of supply, i.e. the tax point, date of issue, an identifying or sequential number if you have one, the supplier's VAT registration number, a description sufficient to identify the goods and services that are supplied, and for each description, the quantity of the goods or the extent of the services and the rate of VAT and the amount payable, excluding VAT, expressed in any currency, the unit price where it's relevant, the rate of any cash discount, if that is offered, and the total amount exclusive of VAT, expressed in any currency, and the total amount of VAT charged in sterling. So there is quite a lot in there. Now, most of the time you'll be doing it, but we often see invoices where it's just made out to Mr. So-and-so, amount charged, that's it. There are some exemptions to that, but in theory, you shouldn't be making out all your invoices. That's what the sort of information you need to be getting to be able to reclaim VAT on the invoice. So that's evidence of the VAT claim. In other words, receipts as well, and they can be in paper or electronic form. If you're only getting them in electronic form, that is fine. Bear in mind, we have a change coming in a couple of years or 3 years time, to be honest, where we're going to have compulsory e-invoicing from 2029. So you need to be aware that from that point, you're going to have to issue an electronic invoice. Now, that's actually not such a bad idea on the basis that you look at some of the software we've got at the moment. You've got Xero, you've got QuickBooks, you've got Sage. they all have the ability to hold VAT invoices. So it's well worth having making sure that your software has the ability to do that coming up over the next few years. So what can go wrong? You have a missing or incomplete records, and that can cause an incorrect return. It could cause a problem during an HMRC inspection, and we'll look at what an HR inspection looks like later on. Or you know, no invoice showing the VAT charge, or at least a VAT number. So main thing is get it right. Make sure you've got everything there, all the detailed information. So it's quite detailed, that. Where that has been charged on supplies to business, then you can reclaim the VAT charge. And that's in the vast majority of cases. There are one or two exceptions to that, which I'm not going to go into in relation to property. But in most cases, you can reclaim the VAT that has been charged. Has the supplier...
Brady said he's going to deal with Leanne.
Sorry, can you just mute yourself, please? How has the supplier got a VAT number on the invoice? And if there are receipts for non-business activity, then you cannot reclaim the VAT incurred. So if it's something that is for personal use or a non-business activity, you cannot reclaim the VAT. And these are all instances we have seen and we come across on a regular basis. Rail fares, they're zero rated. There is no VAT on rail fares. Airfares, there is no VAT on those. Those are also zero rated. Insurance is exempt, so you can't claim VAT back on insurance. Entertaining, the VAT on entertaining is blocked. You cannot reclaim VAT on entertaining. And I put marketing in there with the question mark because you have to then determine, well, is it marketing or is it entertaining? And you've got to take a pragmatic view on this. So you're taking people out for a meal, that's entertaining. If you're taking them out to a football match or the races or something like that, that is entertaining. If you're sponsoring something or you're putting an advert in there, it's genuine marketing, then yes, there's no reason why you can't reclaim the VAT on that. Business rates, they're not subject to VAT. Council tax is not subject to VAT. Nor are bank charges, they're exempt, and bank interest is exempt. And we've seen people try to claim VAT back on all of this. So when it comes to us doing your accounts or doing your VAT returns, it just means we have to go through everything here to make sure you're reclaiming the right amount of VAT. Eye tests, they're exempt. You can't claim any VAT back on those. And alcohol, that's blocked as it's entertaining. So you can't claim any VAT back on alcohol. And with gifts, right, gifts are a bit of a funny one. So if you are buying goods specifically as gifts, then there are some rules which you have to follow. If a business gives away any goods belonging to it, then this is a supply for VAT purposes. And if the nature of the goods is such that they are standard rated, then in theory, you are supposed to account for the VAT on the gift, even though you've not received anything for it. Now, there is a way of getting around this potentially. One, you don't bother claiming the VAT back on the actual gift, so therefore you don't account for the output VAT on it. And there is a £50 limit as well. So VAT, if you're still sensible to claim back the VAT on a bought-in item to be given as a gift, where the cost net of VAT is no more than £50. In such cases, the VAT due on the gift is waived by law. So there's a £50 minimum limit, but if you're buying something to give away as a gift, then you have to charge the output VAT on it. And it's actually £50 for the year. It's in any 12-month period, so it's not per gift. So we often see people say, right, I bought a load of stuff from you, and they stick in a box of chocolates or something in there. Well, that gift is less than 50 quid normally, so therefore you'd be okay. But if the value of all the chocolates that you've given them over the year is in excess of 50 quid, then potentially you've got to charge the VAT back on all the cost of the VAT that it's incurred. So that's just something to bear in mind in relation to gifts. And we've also seen instances of clients claiming VAT back on payroll costs. Why? I don't know. but people are putting through the payroll and then claiming VAT back. They're claiming VAT back on the VAT. No, there isn't VAT on your VAT. Your VAT is your VAT payment. I know why it's being done, because people are simply pressing the button on the software and it's automatically doing it without actually giving it some sort of sense check. You can't claim VAT back where the supplier is not VAT registered. So there's no VAT number on the invoice, then there's no VAT to be reclaimed. Misunderstanding the flat rate scheme by applying the wrong percentage. We see very few people these days on the flat rate scheme because they changed the percentages quite a few years ago to make it not worthwhile in most cases. But where, if anyone is still operating the flat rate scheme, make sure you are applying the right percentage. And if you're on the VAT flat rate scheme, you can't claim VAT back on your purchases, except in, I think it's over £2,000 as a one-off. Simple transposition errors, putting figures in the wrong boxes. And I put it in inverted commas there, forgetting sales invoices. So maybe you're saying, well, no, I'll put that invoice through next time. I want to keep a VAT bill down. No, you can't do that. Those are genuine errors. Sales of commercial vehicles where VAT has not been charged. So if you're having a company van and you're selling the company van, you have to charge VAT on it. And then sales of cars where VAT has been charged, there is no VAT on the sale of a normal vehicle, normal car. Companies don't need to charge VAT on the sale of that. And then also not adjusting for bad debts. Don't forget, you can reclaim the VAT charged on a sale, an unpaid invoice, which has been outstanding for 6 months or more. So many businesses actually forget to do this. Or even in reverse, if the debt is then paid later on, they don't pay over the VAT. So you must remember to reclaim the VAT if your invoice has been outstanding for more than 6 months. You don't need to charge that over. And then the other one is failure to apply the partial exemption rules. So if your company is partial exempt, i.e. you make exempt supplies as well as standard rated supplies, you should also be doing partial exemption calculations each quarter, or at least an annual calculation as well. That can be complicated, so if you've got any issues with that, please feel free to get in touch. And also remember that VAT has to be charged for there to be a reclaim. So basically, if no one's charging you any VAT, then you can't reclaim it. Has anybody got any questions on any of this so far? Let me just have a look in the chat box. No, got nothing in there at the moment. If anyone wants to put anything there, feel free to do so, or you can unmute yourself and shout out your question. So please feel free to do that as well. Moving on to motor vehicles. If you're buying a car, you can't claim the VAT back. It is blocked. It doesn't matter whether it's electric, petrol, diesel, hybrid. The same applies. They're all treated the same way. There is no VAT reclaim on the purchase of a car. However, if you lease a car, in most cases, you will be able to reclaim 50% of the lease payments as and when they are made. The car must be leased to the company and not to the owner personally. And then it will also be subject to the benefit in kind charge on the user, as would be the usual car as well. So leasing can be more beneficial from a VAT point of view, in as much as you can reclaim the VAT, 50% of the VAT on any lease payment. Now then, is it a lease or is it an HP? We have seen a number of instances recently from certain main dealers where they've put on the agreement it's a hire purchase agreement. And technically it might be a hire purchase agreement, but for tax purposes, no, it isn't. So what the difference basically is, if there is a large balloon payment at the end of the lease, then and that's equivalent to what the estimated value of the vehicle is, then that is a lease for tax purposes. It is not an HP. An HP would normally be you pay an amount up front and then you pay it off in full at the end of 36 months or so. And there's no big balloon payment at the end. So just bear that in mind. If you're not sure, please feel free just to get in touch and let us know. Commercial vehicles, vans, VAT charge on a van purchase should be fully recoverable, so you can still reclaim the VAT back on those. Double cab pickups, You've seen the change in the way those are treated, but again, the VAT method, the VAT treatment hasn't changed, so you can still reclaim the VAT on those. Now, in relation to fuel, you can reclaim the full amount of the VAT on fuel receipts, but you'll be subject to the VAT fuel scale charge. So basically, this applies as the car is inevitably going to be used for private purposes. So HMRC collect the VAT based on a scale charge, and these scale charge rates are available from the HMRC website. Or the alternative is don't claim the VAT, don't claim the mileage, and if you're using your own car, claim the mileage rate, 45p a mile, the first 10,000 business miles, and 25p a mile thereafter. That rate hasn't changed for donkey's years, but there is a petrol element included in there. And typically, say the rate is 15p of the fuel, then you can claim 2.5p per mile of VAT can be reclaimed. Okay, it might not be an awful lot, but it's a little bit, and every little bit helps. Travelling and subsistence expenses. If you're travelling for business, then you can reclaim the VAT on your expenses. This includes hotel costs and lunches for yourself. Always keep and look at the receipt as it will tell you how much VAT you've been charged. So some lunches may not have VAT on them. So if you're buying stuff from the local supermarket for your lunch because you're away from the office, some of it may be zero rated. So just check the VAT that's actually on the receipt. You cannot claim for general lunches when you're working from your home or your own office or so on, or if you go into the local Costa every day and you decide to work from there because of the free Wi-Fi. No, you can't reclaim the VAT on those lunches. So note that most travel, as we've seen previously, so rail fares, airfares, most of it is zero rated, so there's no VAT to reclaim, so just keep that in mind. And also you cannot claim if the meal is with clients or with customers. Again, this is business entertaining, so you can't actually reclaim any VAT on that as well. So we talked about this very briefly. When you're using software, it's easy just to click the keyboard without thinking about it and say, yeah, I can reclaim that. That's not a problem. So please take care when you're using software and ensure the right amount of VAT is applied. Now, ideally, you will try and attach the receipts to the software, and QuickBooks and Xero do this quite easily, where you'll be able to attach the receipt to the transaction within the software, so you'll be able to review it quite easily to see if you kept the right amount of VAT or claimed the right amount of VAT there as well. So just bear that one in mind. Overseas issues. I'm not going to go into this in any detail because it can be quite complicated. So please get in touch if this affects you as well. On a business to business though, no VAT is charged, but there is conditions on doing that. So if you're selling goods to another overseas business, then you don't need to charge the VAT as long as it's within the, we're talking about the EU basically. But again, it can get quite complicated. So please get in touch. The other thing which isn't on here as well is property. VAT in property is probably the hardest tax you can ever come across. There are so many rules and regulations in relation to property development, the state of what type of property it is, whether it's domestic, whether it's commercial, what it's been used for previously, whether it's a conversion, and so on. If you've got any of those sorts of issues, you've got any of those sorts of scenarios you're dealing with, please feel free to get in touch and we can talk those through with you. Business gifts we've already touched on. VAT visit. So what can go wrong? Invariably, you're going to get a VAT visit during the business life, at least one, probably more than that. So what actually does a VAT visit involve? Some of you may have already had them. They normally give you advance notice that you're going to have one, normally a few weeks, and they'll tell you the date and time and what sort of records they want to see. Occasionally they'll do these remotely. I think during COVID that happened a lot. Obviously now they're getting back to actually coming out to clients and actually going through the records. So during the visit, they'll want to know what your business does, how you make your money, what sort of accounting system that you operate. They're going to check the past VAT returns for accuracy. and compare figures against your accounts. Bear in mind, they normally can only go back 4 years anyway. That's the limit. So they'll look at anything going back. Normally, they'll look at something current and maybe a couple of years ago. They want to see sales invoices and receipts, purchase invoices. So again, if those are attached to your software, it makes life a lot easier. They want to see bank statements, how you actually track the VAT. And if you're dealing with import and exports, they'll want to see that as well. And how you record the transactions, if your VAT codes and rates are applied correctly. Normally, they'll start asking a load of questions as well. They'll normally have a chat at the beginning of the visit to say, how do you record your VAT? Who's responsible for submitting returns? How do you deal with unusual transactions and so on? And it can take from a few hours to a full day, normally not much more than that. And after the visit, they might actually say, that's it, I'm fine. They won't actually tell you that your system is actually working correctly and we're absolutely dead happy with you. They just won't say anything at all. And now they'll turn around to say, we've got no issues have been found. They'll come back to you with any minor errors. Sometimes they will ignore some of these and guidance on how to fix it going forward. And whether you've underpaid or overpaid VAT as well, they will let you know that. So to prepare for a VAT visit, make sure that your records are complete, they're organised, they reconcile your VAT returns with your accounts, be ready to explain yourself and fix any obvious errors beforehand. Which means moving on to making corrections to your returns. So that's what normally happens with a VAT visit. If you want to make a correction to your return, normally any amounts under £10,000 of VAT, then you just make the correction on the next return. If the error is more than £10,000, then you have to make a disclosure. Does a disclosure always lead to a VAT visit? No, that's not always the case. It can be you've just made a mistake on something and you just fill in the usual forms on the disclosure and they will take that one way or the other. Invariably, it doesn't lead to a VAT visit, but it can do. But I wouldn't say that as gospel. So it's really making sure you make the right disclosure. And then it may be that you've turned around and you've actually realised you've been doing something wrong for donkey's years. Then make a full disclosure to them. They'll want to know how that has arisen. They'll want to then make an adjustment over the previous 4 years, why that's happened, how you've put it right and what you're doing to put it right. As long as you're doing that, they can be quite happy on the basis that you've spotted this, you've come to them first and so on. Invariably, if they find errors and you've not disclosed them, then potentially you will get hit with penalties and interest as well. And then there is always the opportunity for a time to pay arrangement as well. They will always look at doing time to pay arrangements if you fall behind on your VAT. But bear in mind, in doing all of this, if you are looking to raise finance and you have an arrangement to pay, it's obvious from your bank statements that you have an arrangement to pay in place because the initials NDDS come on your bank statements as part of the direct debit which you set up to make that time to pay. So any fundraising you do later on could be affected by time to pay, but not always. So in essence, that's pretty much it on the common VAT errors that we come across and what we actually see. So if anyone's got any questions or anything they want to ask, then please feel free to do so or put something in the chat box. But in essence, we've gone through most of the errors that we actually see. Some of them hilarious, some of them not so much. But we're always here to try and make sure that we put things right and make sure everything goes through correctly. If anybody's got any questions, please feel free to ask, unmute yourself, shout out, put it in the chat box. I'll hang on for a few minutes after this call if anyone else wants to ask anything, so it's not being recorded. But for those of you who joined us this morning, if you missed anything, the recording will go up on our YouTube channel later on today. So if you missed anything or you want to see the slides, then we can arrange for those to be sent over to you. But again, thanks for joining us today. And I look forward to seeing you on the next webinar on the top 10 tax tips that work. And we'll see you then. Thank you very much indeed.